Welcome back to the Daily Financial News Roundup, where we break down the top financial stories.
And it's a busy one today. We've got trade wars brewing, Elon Musk making headlines, and AI shaking things up.
Let's jump right in. President Trump seems to be reigniting his trade wars, considering a 10% tariff on Chinese goods. And it's not just China. Canada and Mexico are also in his crosshairs. He even labeled China an abuser, pointing to the fentanyl crisis.
This is a major escalation. These tariffs could really impact global trade and even push us towards a recession, though it is interesting how the stock market actually reacted positively when the tariffs were delayed.
Right, any sign of stability in this uncertainty is welcome news for investors. But the question is, how will China, Canada, and Mexico respond? Their leaders are already making strong statements.
They're definitely not backing down, and it'll be interesting to see how this plays out. No one wants a trade war, but it's looking more and more likely.
Now let's shift gears to the tech world. There's a massive AI project called Stargate making headlines. OpenAI, Oracle, SoftBank, and MGX are partnering on this.
It's a $500 billion initiative to build AI infrastructure here in the U.S., and it has President Trump's full support. He's promised to fast-track its development.
But not everyone is on board. Elon Musk, who's a key advisor to Trump, has voiced skepticism about the project's funding.
$500 billion is a huge amount of money, and even with big names involved, securing that level of funding will be tough. Plus, there's that ongoing rivalry between Musk and OpenAI's CEO Sam Altman, which adds another layer to this whole thing.
Talk about a Silicon Valley drama. Now, another tech saga that's been unfolding is the uncertainty around TikTok's future in the U.S.
It seems like a new potential buyer pops up every day. The latest names in the mix are Elon Musk and Oracle's Larry Ellison.
Wow, Elon Musk owning TikTok. This is a wild thought.
Yeah.
But there are other big names circling too, like Frank McCourt, Kevin O'Leary, and even Mr. Beast.
It's a high-stakes game for sure. Even without its algorithm, TikTok's estimated value is somewhere between $40 and $50 billion, and any deal would need approval from both the U.S. and Chinese governments.
Talking about government moves, the SEC just repealed a policy that was a major hurdle for the crypto industry.
You mean the one that restricted banks from offering custody services for digital assets?
Yeah, that one. This is a big win for crypto enthusiasts, especially after the previous administration's attempts to hold the industry back.
Absolutely. SEC Commissioner Hester Pierce, who's often called Crypto Mom, has been pushing for this, and the crypto industry is celebrating. Plus, this aligns with other pro-crypto signals from the Trump administration, like putting a stop to central bank digital currencies and even exploring a Bitcoin reserve.
All right, let's move over to entertainment. Netflix is in the news for two big reasons: a price hike in multiple countries and a massive increase in subscribers.
Almost 19 million new subscribers. It seems like their strategy of investing in big shows like Squid Game and expanding into live sports is working.
We're definitely not hurting for viewers. This also highlights their decision to stop reporting those quarterly subscriber numbers. It feels like they're focusing on long-term growth now.
And analysts think that this puts Netflix in a much stronger position to adjust prices without much backlash. Their content library, which includes a ton of original shows and now even major sporting events, gives them a real edge in the streaming wars.
But not all tech companies are having such a smooth ride. LinkedIn is facing a lawsuit, claiming they used users' private messages to train their AI models.
That's a big deal. This lawsuit raises serious questions about user privacy and the growing power of AI in our lives.
It's a case that could set a precedent for how tech companies can use our data, especially when it comes to AI development. Let's talk about AI in a different context: healthcare. We've got two interesting stories here.
First, we have the story of Will Studholme, who was diagnosed with osteoporosis using AI. The interesting part is that the CT scan wasn't even for osteoporosis, it was for something else entirely. This is what's called opportunistic screening. AI can pick up on signs of disease in medical images even if they weren't the primary focus.
It's like having a super observant doctor looking over your shoulder, spotting things you might have missed.
Exactly. Imagine the possibilities for preventive medicine. Catching diseases early is key.
But wouldn't this overwhelm our healthcare system? Imagine the flood of follow-up appointments and tests if AI starts flagging more and more potential issues.
You raise a good point. Integrating AI into healthcare will require careful planning and resources to make sure it helps, not hinders, this system.
Now, for the second story, let's look at AI in drug discovery. In Silico Medicine, a company, is developing a new drug for idiopathic pulmonary fibrosis, a serious lung disease, using AI.
What's incredible is how AI is speeding up the process. They're using something called generative AI to design potential drug molecules, which saves a ton of time and money.
It's amazing how AI is tackling these complex medical problems.
It's truly groundbreaking. AI is revolutionizing medicine, from early diagnosis to faster drug development. It's amazing to see the potential of AI, but also, the need to be careful with it. That LinkedIn lawsuit is a perfect example.
Yeah, AI could revolutionize healthcare.
Mm.
Think faster drug discovery, early diagnosis, but we need to make sure we use it ethically.
Right, ethically and responsibly. And talking about adapting to change, Netflix is a great example. They're really showing how to stay ahead of the game.
They are embracing new tech, diversifying their content. It's clearly working for them. And Texas Instruments, their success shows how much the semiconductor industry is booming.
Oh, absolutely. The demand for semiconductors is just going up, up, up. Driven by AI, by cloud computing, the whole 5G rollout, companies like Texas Instruments are in the perfect spot to take advantage of that.
And it's not just about the tech, right? It's the companies behind it. Their success or failure impacts the entire economy.
No doubt about it. And speaking of impact, all this news about Elon Musk, it really shows how much a CEO's personality can affect a company.
It does. Musk's decisions, his way of doing things, it's gotten him a lot of attention and it's pushed his companies forward, but it's also caused some controversy. Will it work long term? Who knows?
Good question. It's a tough balance, being innovative, taking risks, but also being responsible. And talking about responsible, that story about Tavogen Bio, their work on those T-cell therapies, amazing. Really using technology to make a difference.
I agree. Making those life-saving therapies accessible and affordable, that should be the goal. It's something all companies should be thinking about.
I think so too. And it shows how powerful it can be when different fields collaborate. Technology and healthcare working together, that's where real breakthroughs can happen.
No doubt about it. But we also saw that lawsuit against DMC Global. A reminder that transparency and accountability are so important, especially when it comes to finance.
Yeah, investors need to be able to trust the information they're getting. When companies aren't transparent, it can really hurt people financially.
It really can. And it highlights how important it is for investors to do their homework, really look into company statements and financial reports before making any decisions.
Absolutely. Due diligence is essential. Now, let's talk about something that's changing the internet as we know it, Web 3.0. Are you familiar with that?
I am. It's often called the next generation of the internet. It's built on blockchain technology and is all about decentralization, user ownership, and better security. We're already seeing it disrupt different industries, especially finance.
Exactly. Decentralized finance, or DeFi, is a great example of that. It's basically creating a whole new financial system, one where individuals have more control, where they can access financial services directly without needing banks.
That's a really interesting development. It could change how we manage our money.
Yeah.
But it's still early days for DeFi, and it definitely has its own set of risks and challenges.
Very true. It's important to do your research before jumping in. Now let's talk about another exciting trend, the metaverse.
Ah, yes, the metaverse. It's basically a shared virtual space, a mix of physical and digital reality. Big tech companies like Meta and Microsoft are pouring money into it.
And it's not hard to see why. The metaverse could change how we interact, how we work, even how we have fun. Imagine virtual real estate, immersive games. The possibilities are pretty mind-blowing.
They are, but we can't ignore the potential downsides, things like privacy concerns and the possibility of it making existing social inequalities even worse.
All valid points. We need to be cautious and make sure it's developed responsibly.
Agreed. Now let's shift gears a bit and talk about energy. The move towards renewable energy is picking up speed.
Absolutely. Climate change is a huge concern, and there's also a push for energy independence. This is creating opportunities for investors and companies working on solar, wind, and other renewable technologies.
And we're seeing governments around the world putting policies in place to encourage renewable energy adoption. It's clear that the future of energy is sustainable.
And speaking of sustainability, there's a growing focus on ESG factors when it comes to investing. Have you noticed that?
Definitely. ESG investing considers a company's environmental impact, social responsibility, and governance practices. Investors are becoming more and more interested in companies that align with their values.
Exactly. And this is pushing companies to improve their ESG performance and be more open about their sustainability efforts.
It's a positive trend, for sure. Now let's wrap things up with a quick look at the overall economic outlook. Experts are predicting modest growth for this year, but there are still challenges ahead.
For sure. Inflation is still a concern, even though it's starting to ease up a bit. And central banks are trying to walk a fine line, keeping inflation in check without causing a recession.
It's a tough balancing act. And then you've got the geopolitical tensions, those ongoing trade disputes. It all adds to the uncertainty.
It does. And we can't forget about the job market. Some sectors are struggling to keep up with how fast the world is changing. It's a mix of good and bad news out there.
It really is.
Yeah.
We need to stay informed and be ready to adapt. That's the key to navigating these uncertain times.
Yeah.
It is a lot to keep up with, that's for sure. But that's what makes it so interesting, right? Trying to make sense of it all.
It does. And it reminds us that we're all connected. What governments do, what companies do, what we do as individuals, it all has an impact.
So as we wrap up today, is there one key takeaway you'd like our listeners to walk away with?
You know, if I had to pick one thing, I'd say it's adaptability. The world is changing so fast with technology, the economy, even social values. The people who can adapt, learn quickly, and change their strategies, those are the ones who will succeed.
I think you're right. Look at Netflix, how they're using new tech and coming up with fresh content, or people exploring these new ideas like Web 3.0 and DeFi. Adaptability is essential.
Exactly. And it's not just reacting to change, it's about being proactive, staying informed, and questioning the way things have always been done.
Absolutely. We need to keep learning, keep growing, and be open to new ideas.
And we can't forget that we're all part of a bigger picture. What we do affects others.
Well said. It's a reminder to be more aware, more responsible, and more engaged with the world around us.
Couldn't agree more.
All right. That brings us to the end of today's daily financial news roundup. Thanks for joining us.
As always, we encourage you to stay curious, stay informed, and stay ahead of the game.
And we'll be back tomorrow with more news and analysis from the world of finance. Until then, keep exploring and keep learning.